So hi, I'm Jody Harris. I'm the Associate Director at the Maine Center for Economic Policy. And today we're going to be talking about payday lending and a new rule that was just issued to help protect Maine consumers from the harms of predatory payday lending practices. So payday lending in and of itself isn't bad. It's called payday lending. I'm not sure if you know why, because a lot of people would traditionally take out a small loan this week in anticipation of getting their paycheck next week, and they would pay off the loan when their paycheck came in a week later. So they're short-term loans that are billed as giving people an opportunity to pay off an emergency expense that they didn't anticipate, and they get some ready cash to pay that off. The problem is that they are very high interest. They're aggressively marketed by the payday lending industry, and they purposely target people who are having a hard time paying their bills. So they trap them into this cycle of debt where they take out one payday loan, comes next week they can't pay it off, so they take out another loan to pay off the first loan, all the while paying an average in Maine of like 217% interest. If they can't make a payment, the payday lender will just take the money right out of their bank account. Whether or not there are sufficient funds in there to meet that, and if there aren't sufficient funds, then they get hit with overdraft charges and a lot of fees. So these fees and interest just ratchet right up and just trap people in this ongoing cycle of debt, and it becomes a real burden, a real financial burden for Mainers, particularly seniors, women, our military veterans, people of color, and low-income people. Those are the people that payday lenders target because they know that they're a really good market because people are short of cash and will use this loan product. So it's the Consumer Finance Protection Bureau. It's a federal agency, federal regulatory agency that Congress created back in the wake of all the loan defaults and the bank closures. It really created this bureau to regulate consumer finance laws so that we didn't have that kind of activity again where banks are defaulting and closing and having to get a bailout from Congress. So they have a broad scope of authority over finance issues, consumer finance issues particularly. Payday lending is the one that we most often hear about because it's current, but they also regulate student loan debt, student loan servicers. Those are the companies that when you take out a student loan, they manage the loan process. And a lot of times they do some crazy things that also impact students, trapping them into more debt than is necessary. The CFPB also regulates banks and how they issue mortgages and credit card companies and a lot of other financial institutions. So they're really here Congress set them up to protect the average consumer from the big banking industry, the big Wall Street banks that are just there really trying to make a profit. They don't really care about consumers. The CFPB started talking about regulating payday lenders, I think like 5 years ago. There was gradually, as payday lending became more prevalent and people got trapped in these debt cycles, there was a huge outcry among consumer advocates particular saying we need to do something. The Consumer Finance Protection Bureau also collects complaints and investigates, and the number of complaints was just skyrocketing. And we saw that here in Maine too, the number of complaints coming into the state. Consumer Finance Bureau also was increasing. So the federal agencies crafted a proposal that said, here is what we think we want to do to regulate this industry. They put that out there. They got comments back. Took them a year almost to sort through those comments and revise it and finally issue a rule just this last week. And what it does essentially, it's quite lengthy, but the real crux of it and the most important piece in my view is that it will require payday lenders to verify that a borrower has the ability to repay a loan before issuing the loan. It's the same kind of things that are required of banks and credit unions and credit card companies. All of those institutions, ask for financial information, and they make a determination whether or not you have the financial wherewithal to pay this back before they give you a credit card or before they give you a home loan. So that's what that's the standard payday lenders will be held accountable to. And the standard is extremely important in that it says payday lenders must verify ability to pay based on a person's financial resources to meet their basic living expenses without having to take out another loan. So it's really clearly defined what ability to pay means. And it's really clearly aimed at, helping low-income people who would get trapped into the cycle of debt that I talked about earlier. Yeah, so the payday lending industry is very aggressive. This is how they make their money. This is how they make their profit. So they don't want to be regulated. They don't want to be held to these standards that are going to, require them to go through this extra work to verify a person's ability to pay. And they're notorious actually for trying to find loopholes in existing law and trying to get around laws. In Maine, for example, Maine actually regulates payday lenders in that it requires them to be licensed to operate here in Maine, to provide a surety bond to operate in Maine, and Maine also caps the interest rate that they can charge. And they have consistently ignored our laws. They operate under the radar, online. They don't often have storefronts in Maine, but they do have an online presence, which is hard to find them, hard to enforce our regulations and our laws. And they'll claim, the laws don't apply to us because we're not physically located in Maine. So they have lots of ways to try to skirt the laws in Maine. With this new rule, they're sort of ratcheting up their activity to the point where they're finding friendly legislators in Congress, asking those legislators to sponsor legislation to overturn the new rule. There's a bill pending, was already passed in the House, is pending in the Senate, the Financial Choice Act, which would not only overturn the payday lending rule, but it would basically gut the Consumer Finance Protection Bureau of all of its authority, making it ineffective in protecting consumers. So Misa, as you know, looks at policies that impact Mainers' economic security, and payday lending, getting trapped in this cycle of debt, pushes people into poverty, pushes them into debt that they can't get out of, and really impacts their ability to raise their family and educate their children and put food on the table. So that's a real concern to Misa in the bigger economic scheme of Maine families being able to be a part of the economy. MISEP has been, since day one, has been in one of the consumer advocates that has pushed for this rule, encouraged the Consumer Financial Protection Bureau to write a strong rule, and then has advocated with our members of Congress to support it and not to pass legislation that would harm either the rule or the Bureau that's implementing it. Our Congress members will listen to average citizens who have a story to tell. So if somebody has been affected negatively by a payday loan, that they get caught in this cycle and have to take out, 1, 2, 3, 4 loans, and have trouble paying it off, what's the impact that has been on their family finances? Our congressmen, men and women, have to hear about that. They need to know that this is a real issue for Mainers. Real people are being impacted, and to hear the stories of how hard people have struggled under an unregulated industry. So call your congressman, write them letters, email them. The more people that speak out, the better.